The due diligence process is an investigation process before agreeing to the terms and agreeing to the business partner. It helps identify potential risks and allows investors to make informed decisions. Based on the finding, therefore, one must conduct a due diligence thoroughly. Before performing a due diligence, also known as a DD, you would have to narrow down what the objectives are. There are many different kinds of due diligence. There are financial, there are legal, operations, and management. There's probably 20 different kinds of due diligence, and so there's no one way of doing this process. It really depends on the industry, the stage of development, and area of focus. In terms of the deliverable timetable, it takes maybe 1 week to 1 month, depending on the available data. For a financial due diligence, I may request for items such as annual tax return, bank statements, financial statements, tax audit, reassessments, accounting policies, or even customer lists. With the provided information checklist, I can evaluate if a company has a compliance risk. I can check to see if there's any large penalties, which could suggest that a company might not have the right team yet to fulfill their compliance obligations. I can also view their customer list for customer retention to see if there's any high concentration percentage, because if the bulk of the company revenue is coming from 1 or 2 customers, it might suggest that they're not independent from this particular customer. There might also be some conflict of interest for the high customer concentration, or that they are not diversifying their products to attract other customers. Another process in the financial due diligence that must be performed is reconciling the financial statement. Through this process, you identify if a company has a second set of accounting books. You can also see if they're transparent or forthcoming about their company's finances. Remember, if a company comes with a messy financial statement, it's often flagged as a risky company. The person performing the due diligence will have their own financial scorecard, but in general, to ensure that they have the minimum compliance at the very least. A due diligence helps to make smart decisions in business relationship, companies, people, and also mitigate potential risks. So if you have any questions in terms of due diligence, please feel free to contact us at OBOR.